Welcome to the annual review of FY19. This has been a year of 550-100. Allow me to explain this. For the first time ever, Mahindra and Mahindra PAT crossed 5,000 crores. Its revenue crossed 50,000 crores and the M&M's consolidated revenue crossed 100,000 crores. We have just ended the year with the highest ever auto and tractor domestic volume, with 5.69 lakh and 3.17 lakh vehicle and tractor respectively. We have grown in both segments for the third consecutive year. In auto export, we have reached a record high of 38,000 units. F19 has also been a very busy year with a slew of new launches. We launched 3 new products in the UV segments: Morazzo, Alturas G4 and XUV 300. All the 3 new vehicles received an excellent response and are performing well. In addition, we now became a full-range MHCV player with the addition of Furio ICV in our trucks portfolio. Our EV strategy is another demonstration of our journey on the road less traveled. Today, we are the only automobile OEM who have invested in EV technology as well as products. Our product range, right from Trio to Batista, places us as a global player of importance. Continuing on our market leadership in tractors, our tractors have crossed 3 million cumulative volume. It's interesting to note that while it took 8 years to go from 1 million to 2 million, it took only 6 years for the next 1 million. We are also aggressively increasing our farm machinery portfolio, which is witnessing significant growth in the last year or so. Before I dwell into financials, let me outline the context in which we should evaluate this year's performance based on our numbers. As I said earlier, we witnessed an unusual liquidity crisis and stress in financial sector during the second half of the financial year. This led to poor consumer sentiments, which made it difficult for us to pass on the entire commodity price increase. Internally, the slew of product launches and associated costs also impacted profitability. The new axle norms added fuel to the fire as far as MHCV segment was concerned. Despite this challenging scenario, our performance for the year has been quite good. We achieved the highest ever EBITDA, highest ever PBIT, and highest ever PAT, setting new milestones in this area. Our revenue was 52,000 crore plus, registering a growth of 11.1%. Our PBT before EI was 7,000 crores plus, which is a growth of 13.4%. Our PAT was 5,430 crores, a growth of 30%. On a full year basis, we grew profitably all the way through. Our OPM was down 60 basis points on the back of new product launches and commodity price increase, which was very high last year. When you come to segment revenue in auto and tractor, auto sector revenue was 34,000 crore plus, which was a growth of 13% over the previous year, and a bottom line was 2,782 crores. Coming to tractors, our top line grew at 6.8% to be 16,900 crores roughly, and our bottom line grew at 3.8% to be slightly short of 3,300 crores. So both these sectors, in a very tough environment, did extremely well. All this with very, very prudent management of the balance sheet. Our debt equity ratio was 0.08 on a gross level. But if you minus the cash, then it was minus 0.12 at a net level. Similarly, gearing ratio was very, very comfortable and very low. We have the powder dry to be ready for any opportunity that comes in the future. On a consolidated basis, our overall revenue grew from 93,900 crores to 105,806 crores. This is the first time we have crossed 100,000 crores at the consolidated level. The profit after tax at consolidated level was 5,091 crores. The segmental breakup clearly indicates an impressive growth in top line and bottom line of financial sector and IT services segment. As you can see, we have been realizing consistent cash inflow from our investment portfolio and the quantum is steadily increasing. For instance, our investment portfolio in the last 3 years ending FY19 has given significantly higher cash flows compared to the 3 previous cycles. And you can see that F19 was also a big cash inflow from both dividend and reinvestment. The Mahindra Group market cap has grown 191x and 38x in the past 25 and 15 years respectively to touch a total market cap of 30 billion as of March end. We have performed consistently in the past, taken care of the present and are prepared to leap into a sustainable future. We are designed with corporate governance in our DNA. We are designed to make our stakeholders prosperous and we are designed to rise. Kal, aaj aur kal. Thank you.